Will rising interest rates cause my home price to fall in value? We're going to talk about this topic today. My name is Chris at Hauseit. It's a question that's probably on the minds of many of our viewers and customers, so let's dig into it. As many of you may have heard, as reported in the news, the average 30-year fixed mortgage interest rate has crossed 5% or increased above 5% recently, and that's the highest we've seen in a few years. And as recently as the previous year, people were seeing quotes still of under 3%, maybe between 2.5% to 3% for a 30-year fixed. So this is almost a doubling of interest rates. So of course it does have an effect, but the effect depends on what segment of the market you're in. For example, for smaller starter homes that are for perhaps first-time buyers and such, oftentimes the rate does matter a lot more because the math often works out to essentially how much money you can afford and how big of a monthly payment you can make. So depending on sort of the level of the home, if it's more entry level, yes, of course rates are going to have more of an impact, but it's all relative. For example, if you own a home and you're considering selling and it's more of a on the move up market, or it's a more luxury property where perhaps some segment of the buyers, for example Toll Brothers, a luxury home builder, reports that 20 to around 20% of their buyers are all cash buyers for more of the luxury segment. So there is going to be more of that for for a higher end home, a more luxury sort of product where perhaps either some segment of the buyers are buying all cash, so it doesn't really matter as much, or if they are financing, they're definitely financing a lower LTV. They're not doing a conforming loan with 10% down or less. So yeah, it really depends on the segment of the market. It's also not all-encompassing. Interest rates are certainly one component, but it's important to remember that it is just one component. In real estate, there are larger trends at play as well, both nationally in terms of the millennial cohort moving into the stage of life where they are starting to buy homes en masse. They're the largest cohort. So they're really, especially post-pandemic, households are reforming, people are having kids and such, and you are seeing a lot more demand from the millennial generation in terms of buying. So that's a generational trend across the country, but also this country has underproduced housing, especially after the great financial crisis. So the annual rate of homes produced is definitely below sort of what we need per year, and it's gone on for a number of years post the great financial crisis. So there is a great housing shortage as well, structurally. So, and you've seen that in the news too, with quotes of demand or inventory collapsing, especially in certain hotter coastal markets and such. So there is definitely a lack of inventory, which is why you're also seeing prices for existing inventory continuing to climb. So there are many factors. Sure, interest rates going up don't help, and especially they don't help depending on what segment of the market your property is in. But on the flip side, you have all of these structural patterns. You have tremendous demand, pent-up demand from the millennial generation, and you have a structural shortage of housing because we underbuilt housing. And even though housing starts and such are back up and quite high again, it is going to take some time, many years we think, for the structural imbalance to be fixed. And of course, it doesn't help that we have supply chain shortages, labor issues and such, because things are taking longer and are more expensive to build, which also props up the pricing for existing inventory. But again, that's going to take longer to work out as well. So we, on the balance, think those structural issues will outweigh the effects of mortgage interest rates being higher. Keep in mind that in decades past, when we had much higher inflation in the 70s and 80s, mortgage interest rates were in the teens, for example, so quite a bit higher than it is today. So there you have it. We hope you found this video helpful. If you did, leave us a comment below. We love to hear your thoughts. And of course, we can get into more details, more technical numbers and details and such as well. If you leave us a comment, we'd be happy to share some of our more specific thoughts and analyses too. And of course, if you're looking for help on buying or selling a property, either in New York and Florida, we cover both regions. We can help you save 6% when you sell with an agent-assisted FSBO listing, and of course, if you're looking for something a bit more hands-on, we have a 1% for full-service listing option where one of our agents handles everything for you for a 1% listing fee. And of course, if you're looking to buy a property, we can help you save 2% or more on your purchase by giving you 2/3 of the buyer broker's commission back to you, subject to us keeping a small minimum of 1%. This can be quite significant because, not only could the commission to buyers brokers be 3% on average, which is what you most often hear about. Sometimes new developments will offer more than that to encourage buyers brokers. They might offer 5, 6, or 7% in commission. So if we give 2/3 of that back to you, that can usually more than cover your closing costs, especially in areas like South Florida, where closing costs are quite low. So we hope you found this video helpful. My name is Chris at Hauseit, and we'll see you on the next one.